So, hello everyone, welcome back to this second video of our course. The Oracle Financial Cloud is a complete and integrated financial management solution with automatic financial processing, effective management control, and real-time visibility to financial results with the reporting. So, I am referring to this as an integrated financial management solution. Now, what I did like to do next is to show you a diagram that I have just created to talk you through this integration. We will need we will talk about various capabilities and the products that you have within the Financial Cloud. So let me take you to the second slide in the diagram. So here is the second slide, the integration diagram. Now I know that it looks a little bit busy and jumbled, but I'm going to talk to you through it and hopefully at the end it will come together for you. So I will start over on the right side with the general ledger. First, what is the general ledger? I always think of it as a big bucket of all the accounting transaction, including the cost and revenue. Everything associated with an accounting transaction is going to end up in the general ledger, and the general ledger is taking those transactions from the subledgers. Now, the transaction that we have, here's the subledgers. So I will discuss the subledger just in 1 2 minutes. Now, the transactions that we have in the general ledger are journals. This is what you enter in the general ledger, and then these journal get posted into a ledger. Now, they here in this diagram, as you can see, there are three types of ledgers: the reporting currency, the primary ledger, the secondary ledger. Now, I would like to explain what they mean. You must have a primary ledger, that is the main record keeping ledger. So, this is the primary ledger. I will discuss these parts just in a minute. And for the secondary ledger, if you need another accounting representation. So, for example, if you are operating in the UK and you need to report in international financial reporting standards, you might set up a secondary ledger for that other accounting representation. And then if you maintain another currency representation for whatever the hell reason you might have, then you can set up a reporting currency. Now, the primary ledger of all ledgers are made up of four C's: the chart of accounts, currency, calendar, accounting convention. The accounting convention might also be called as the accounting method. Now, with the secondary ledger, any of the four C's can be different. So, for example, the chart of account can be different, the currency can be different, calendar can be different, the accounting method or the convention can be different. It can be different, all of them can be different, whatever it is. So, I won't get into the detail of this. So, you receive journals into the general ledger and they get posted into the ledger. Posted into the ledger to update the GL balances and the balances cube, which allows us to do basically multi-dimensional reporting and analysis, which is discussed later in the course. So basically, you must be asking to yourself, where the hell do the journal come from? As you can see, the journals come from the subledgers. Now, the subledgers may be the Oracle ones or non-Oracle ones. So for the most part, I've tried to cover the all of the Oracle ones over here, and I will get you through all of them one by one. So I would like to start from the self-service procurement one and the purchasing one. So let's start off with the self-service procurement one. So basically, in the self-service procurement, the user enters the requisition when he needs to order some goods. The requisition gets created into a purchase order, which is sent to the supplier. The supplier in return sends in goods, which is processed by the procurement department. Over here, it is called the purchasing module. And the supplier also sends an invoice to the customer. So to the customer, which will be and so the payables module is going to process the invoice and payments and also the expenses related to it. So the supplier sends invoice and you enter that in the payables. Now there's various way of entering the invoice which will be discovered in this course. Oh man, this is fucking bullshit, man. Now, if you're using procurement purchasing, then you're going to match either of the purchase order or the invoice. You are going to match the invoice with the purchase order or the receipt. Now, matching is just to make sure that you have charged the right price, so you got the right quantity and etc. So it's basically a control thing. Now, it's also if you're matching to a purchase order, it copies the counting on the invoice. So you have the invoice in here, which is the side you're matching to either purchase or the receipt. Then you make the payments out to the supplier for those invoices, and then probably at the end of the day you're going to run a process called create accounting, which takes all of those transactions and accounting impact of the transaction, and it pushes it through the subledger accounting. And subledger accounting is a rule here. Now this is where it will create subledger journal entry. So here is the journal. And now depending on the type of ledger you have set, it will either just create one journal or create a journal for each of the ledger types that you have. So now within the payable applications, you might enter an invoice for an asset purchase. And if you do, it integrates the asset application. So you run a process called create mass additions, which takes those asset invoices out and puts them into the mass addition interface where you have to prepare them, and then you have to look and decide whether it should be assets. Now, if they should be assets, then you choose you choose to post them, and if they are not supposed to be the assets, you delete them from the interface table. You did have to fix the problem in the payables, obviously, because it's been coded into the wrong place. You can split them out too. So let me explain this a bit. So if you got four laptops in one line and it will come through as one asset, then you can split those out into four different assets. You can also merge. So if you have ordered a car and then you have charged for the car on one invoice and delivery is on one invoice and the number plate is on another invoice, you can merge those invoice licenses together into one asset. So you get what I'm saying? Like you got a number plate, you got a car, and then later down the way, maybe in 2 3 months, you get some kind of sound system in the car, or you get some type of repair in the car. I won't say repair. What do you call it? LCD type, the lights in the car. So that comes with a separate invoice. Now you can put that as a cost adjustment if you want. So coming on to the second table, so there are various things that you can do during the preparation of mass additions. Once you have done this, the asset is basically in place in the asset book. It then starts its life cycle, so running depreciation, for example, and then when you run the depreciation process, you may have to transfer the asset. That could be transferring from one location to another or transferring from one employee to another. And you have to make some adjustments, and you will also retire the assets. But again, you will have to run a process called period accounting over here. And the process for each of the subledgers, and you run this process for each of the subledgers, and this process will take the asset information and put it into the subledger accounting that could be transferring your asset from one location to another. Okay, into the subledger accounting. So yeah, that was the assets. When you put them into subledger accounting, it goes to the journal and then transferred to the general ledger to be posted. So that for the assets. So coming on to the expense, I would like to talk about expenses here. In expensive expenses, you will be entering expense reports. You have been away on a business trip. When you come back, you need to enter an expense report, and that gets transferred over to a payable application, and that is going to create something called a payment request, which then gets picked up and gets paid. So here over here we have receivables too. This is going to be for your customer invoices where you create the customer invoice and send out to your customers. And once they hopefully send us the money or make a payment on those invoices, you will record them in form of customer payments or receipt. But if they don't pay you, they go bankrupt or delinquent. So you move it over to the advance collection where you either send them reminding letters to tell them about the delinquent payments or the outstanding transactions, or you can use something called strategies within the collection application where you have a number of tasks or work tasks that get assigned uh, to a collector. So delinquent invoices move over to the advance collection for the collector to basically then chase the customer. Then again, you have a process called create accounting, which is going to take the receivable information into the subledger accounting, going through this general subledger over here and creating the journals. So let's talk about cash management over here. So you have cash management where you will either enter the bank statements. You will enter the bank statements and then reconcile them. And you will be reconciling. I don't seem to have drawn the lines over here. So the payable line should be from here to the over here. Okay. So you will be recording the payable payments into the cash management application. You will also be reconciling the receipts coming from the receivable application, and then you integrate with the payroll within the cash management. So all the things mentioned here is the last thing to mention here is over here is tax, because of course the payable invoices or the receivable invoices or the expenses, the purchase order, all of them are going to have a tax calculator on them. And this happens in the global tax engine. So you set up a tax regime which has all of your tax rules, depending on whichever country you are operating in. And you model the rules of the tax authority in the tax module, and then it will calculate the taxes on each transaction. I think so that pretty much covers all of these application. Hopefully the integration has made sense to you. And that's it. That's the end of the video. So thank you for watching this video, and like, subscribe, and share my channel. I'm also learning this, so I'm teaching it a way of memorizing and teaching others too. So do rate me out of 10. Like honestly, because I think I am doing really bad. So yeah, thank you for watching the video. Goodbye.